The holiday season has come early in Japan in the form of the latest economic data. On an annualized basis, GDP grew 1.8% in the third quarter, way higher than the 0.2% preliminary estimate. Michio Ishida tells us how Japan managed to do so well despite slow global growth and rising trade tensions.
Well, let me explain to you the rundown. Personal consumption makes up about 60% of Japan's GDP. Now, this was slightly stronger. That's 0.1 point. So that's on the back of people rushing to purchase PCs, cosmetics, TV before the sales tax hike kicked in. In October, Japan's sales tax rose from 8% to 10%. Capital investments was actually the biggest contributor to this revised up GDP. Mizuho Research says that there was a brisk investment on softwares before the sales tax hike kicked in. And there was also investment in the efficiency of operation on the back of labor shortage. Housing investment and public spending were slightly higher, but exports remained weak. Now, the data does not mean that the Japanese economy is in good shape, because analysts forecast a weaker economy in the October to December quarter with low consumption due to the sales tax hike. And we've been hearing that October consumption figure has been released, and it's contracted 5.1% compared to a year before. And wages are lower, and corporate earnings are weak. It's on the back of exports of cars to China weaker because of the U.S.-China trade war. However, remember last week the Abe government introduced the stimulus package. This is hoped to prevent Japan from going into a recession.